So I'll bet you're one of those people that kind of likes Bitcoin, but the volatility is killing you sometimes. Well, I've got an answer for you. So we're going to go through that today. Right? We're looking here at the trading platform called Composer.trade, which allows you to trade stocks, crypto, or both together, which is kind of a game changer. I don't know many other platforms that do that. So first, let's take a look at what we have here. We have a chart that shows Bitcoin in red, the NASDAQ in gold, the SPY in pink, and what I call all-weather Bitcoin in green. All right. So we're going to look at the numbers, and then we'll look at how I achieved this. Okay. This is over the last 3 years. We start here on February 2022, and take a look at what happened with Bitcoin. As you know, there was a big bear market in Bitcoin, and it got down as low as around 63% loss before it started picking up again. But this took a lot of time, and so we'll look at closer at the numbers. So over this 3-year period, Bitcoin did gain 120%. However, it took almost 70% drawdown, which for the people who want to sleep at night, that's not easy to do. All right. You see that the NASDAQ had almost a 30% drawdown, and SPY had a 22% drawdown. The Symphony, this is called a Symphony, it's kind of a strategy that's created on this platform, gained just about equal to Bitcoin. But here's the big difference that would help someone sleep at night. The drawdown for Bitcoin was 67%. The drawdown for this Symphony was 14%, less than even the S&P 500. So if you want to sleep at night, this is part of why I created this. So we'll take a look at how I did this, and then you gain a little understanding of this. So with the good thing about Composer.trade is that you can use other stocks, bonds, crypto to trigger what you want to happen. And so this is a very simple symphony or strategy. I have it named here, all weather Bitcoin. Just open it up for you. So without getting, it looks technical, but I'm going to just talk you through it, okay? It has a single condition. It says if the 90-day cumulative return, now I'm using GBTC here as a ETF in place of Bitcoin itself, because actually it's cheaper to trade an ETF than it is crypto. So if I can do that, I'll take that instead of paying the 1/4 to 0.5% or whatever I have to pay to buy Bitcoin, which you can do on this platform, but I'm choosing to do it in ETFs with this. So cumulative return means how much did it gain over the last 90 days versus the NASDAQ, which is represented by QQQ. So I did a lot of experimentation with this, and essentially I took 4 assets, Bitcoin itself, a representation of gold. BTAL is it's something that is a little bit anti, when the tech sector is weak, this one does well. We have QLD, which is a 2-time return on the NASDAQ. So there's leverage product that I'm using here. So if the 90-day return of Bitcoin is better than the NASDAQ, this is the positions we're going to take. And one of the really strong points for this platform is that you're able to take multiple assets. You can weight them in terms of how much money you're going to put into each one. Now, compare this to a typical trading platform where you can only trade one thing. It's going to be Bitcoin, it's going to be the NASDAQ 100, or other crypto, and you have to basically just use one ticker to work with, which can be, first of all, very volatile. and there's not a lot of easy ways to manage it. So by doing this, you're creating basically your own little index fund, okay, with these four symbols, right? And then if Bitcoin is underperforming, then guess what? We go 0 Bitcoin, we go into gold, into BTAL, and into the NASDAQ, okay? So you could see when Bitcoin's underperforming the NASDAQ, it means that the market as a whole is probably not doing that well. So we have a greater allocation to protective instruments like GLD, which is basically trading gold, and then, as I said, this symbol here. So, so the takeaway here is that you can use multiple symbols, play with it, and it's amazing that what you can do in order to increase the return and lower the risk. And I go back to this here. To be able to have what is a 30% annual return over this period and only have a 14% drawdown, that's what helps me sleep better at night. It's not going to do things like this. Like you can see Bitcoin just rocketing up here in November and in November. This strategy also rises, but it does so more gradually. So we don't get the ripping up and downs, but we get this kind of consistent rise. Even when the stock market was down, you could see here the NASDAQ is down 22%. The SPY is down 14%. Our worst drawdown was 14%. So we maintained a lead, if you will say. We were outperforming all of the way pretty much for this 3 years. All right. So if you like Bitcoin as a long-term investment, you could use something like this in order to auto trade. You're essentially auto trading. So it's an algorithm, and that means you don't have to look at it every day. You kind of put your money in, and it will trade as it needs to. It'll adjust these amounts occasionally based on a 5% threshold. It'll adjust these amounts. So if Bitcoin shoots up, it's going to probably try to keep it close to 18% here. And that's part of the reason why you have this gradual increase, because if you didn't do that, then over a long period of time, your Bitcoin is going to take up a much greater percentage than 18%. Okay. So that's just a quick thing called All-Weather Bitcoin. I'll include a link to the code so that you can, even for free, you can take a look at the platform. You can play with this, and then maybe use it for your investment. Okay. All right. Thanks for watching.